Hey, what's up, everyone? It is Thursday, December 7th, and let's go over the markets. So, starting off, the major news of the day was unemployment claims came in at 220K. They were looking at 221K. So, for most part, it was flat. It was even. It's no big deal. But when did come out at 7:30 right here, you can see it was a catalyst for today to make the market go up. It didn't hit the extension highs or lows for the day. You can see right there, there's extension low, there's extension high. So those weren't hit, but based off of yesterday's move, yesterday was a pretty big move, and today just kind of the market right now is definitely in consolidation phase. You can see just going from about right there to right there. See that? It's consolidating right now. So it just came from being in an uptrend right here. So now it's consolidating. And so then the next one, which is FC, is it going to continue up or is it going to go to a downtrend? But that's one of the two next moves, because once you come out of either an uptrend or a downtrend, you go into a consolidation phase, and this consolidation phase has been taking a good long while. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, at least 13 days it's been in right now. So we're just waiting to see, once they get all those contracts situated, how the big boys want them, they're going to rocket this thing off one way or the other. So the next move coming out of this is either going to be up or down. Because you can see down here, here's one down here we had going to a downtrend right there. And here's the little consolidation phase we had right in there. And then coming out of it, we've been in an uptrend ever since. That's the way it goes. It goes downtrend, consolidation, and then either uptrend or downtrend. And this time went uptrend, so consolidation is going to be either a downtrend or an uptrend coming up for it. But we did have one trade that did go and get filled today, completed. It was, where was it? 2, 3, 4. Yeah, using these orange ones right here. 1, 2, 3, 4 right there. So if we go 2, 3, 4, there was the close above it right there, and it pretty much rocketed right off to get it for a good 9.5 point trade right there. But going into tomorrow, the only thing we're looking at right now is this retracement trade set up right here. I was looking at seeing if this turned red, this may have been a trade, but this one isn't going higher enough for it, so that's really the only thing we have. We do have actually another one. Let's see what this one would look like. May have already gone up and gotten hit. Pretty much, yeah. See that semaphore. There's number 2. There's a 3 lower low, 4 higher highs. So we got expanding triangle. So when it closed down there, that was a signal to get into it. But it would have been terrible to get into this one from where it is. Pretty much close to the yellow line for that thing to be done. So that one is pretty much all said and done. So not worried about that. But again, like I said, going into tomorrow, we're looking for this retracement trades short setup right here. Going over to the Russell 2000, there's a lot going on right over here. So over here, we're looking at a short trade sub, which has never materialized for it. But one thing we do have, let's see, do we have it? Let me delete some of the stuff we don't need anymore. That 1, 2, 3. Yeah, okay. So we do have a 1, 2. Oh, hold on, let me redo it. Third time's the charm. There we go. 3, 4. So using the semaphores, there's the 1, there's the 2, there's high 3, low 4. Using the orange. To get stuff red, you have to have an orange. We went for it to close above. There it did. Closed above it right there. So the target we're looking for is about this yellow line right up there. Now, the way I've started looking at taking these right here is I'm not taking them unless the scenario, unless like the line is pretty much flat up here, like say it's like a flat line, then I'll look at taking it. But see, it has the decreasing target area that we're looking for it. So what I start doing is you take the bottom of the move right there, and then you just go up to the candle that was the that is the entry candle, which would be that one right there. So we have that. and we just draw the Fibonacci level to it. So I just started taking the 50% level. So for me to take this trade, what I do is I would just take that to there, and then the target I'd be up here, you know, somewhere up like that. And that's not going to come and get filled here. Maybe tomorrow it will, but definitely not the rest of the day. Today it will. And then the second area I would look to enter would be, you take the point right there, the big move right there, big move right there, and it would be the 1.414, either the 1.414 from that move, which is going to be the black line signified, or the yellow line here down at the bottom. If it hits the yellow line down here at the bottom, then we move the exit to just slightly below where the breakout was. So somewhere be like that would probably be a good little area. The bottom of that box right there would be a good little area to have it at right there. But that's only if price comes down and hits the yellow trend channel before hitting the target up here. So that's what we're looking for right there. So the reason why I'm also doing it to where I get in at the 50% retracement is, what I've noticed is a lot of the times price does come back and hit that. When it does, it just gets you in a whole lot better level. And if it goes back up, you're actually going to make, you know, more profit. But also, if it does go down and it goes the other way and hits it like right there, well, then you don't necessarily have to get in another contract right there, because even if you get out right here, you know, say you got in right here and you're moving my X right there, well, that's still, you know, over 6-point profit right there. So I'm like getting in right here where I would need to get out earlier if it went back down. You know, that's a 6-7 point loss right there. Well, now I'm still in profit. Now, of course, sometimes you'll miss out on some trades where it'll just rocket up and hit it. That does happen, but it seems like every time I'm in a trade, it doesn't happen that way. But that's just one thing I started doing. And one thing I started noticing was maybe this could be another scalp within this trade right here, is when you have your entry bar right there. So you have put on the Fibonacci retracement level, which I'm looking for my entry for it to come back to it. So, you know, this is a valid entry right there, valid entry right there. But what I started noticing is a lot of times when you put the Fibonacci level on there, the price, or maybe almost every time, the price goes up there and hits at least the 1.146 before retracing. So it could be a new scalp adding into it where you just get in, you know, right when the bar closes. So it signals that, okay, the overall long is going up here. That's the target. But maybe you just take the scalp as the first trade right there, get out, and then hopefully you get a retracement back down to the 50% for that move, get in right there, and then just see what happens. Either price is gonna go back up there and hit that, or it's going to continue, you know, to go back down and hit the yellow line down right there. And then you wouldn't have to, if you get in right there, you don't have to move your necessarily get in with another contract, just because your exit is still going to be above where your original entry is. So it just makes things a lot, it seems to be a lot simpler for it. And what I've noticed is when I put the 1.14 extension off of the big movement area, so that'd be from points 3 to points 4, is it seems like that seems to be kind of the area where the low is going to be in place if price does go down that low before it, if it does hit it before it moves back up. So sometimes if it's like, if the shift pitchfork is extremely slanted, like there's no way price is going to go either up there, hit it, or down there, hit it. So in the 1.414 seems to be kind of the level to look for it. So that's just another thing that I've seen in here. But yeah, we'll be looking to get in right here and tomorrow for sure, looking to do that. And actually what I'm doing is I'm putting this thing back on here to see if my theory about having the extension level on, or the Fibonacci extension level plus the retracement, but the extension level on the closing, top of the closing bar to the bottom of the lowest point from that move, if it goes up there and hits that, and that will be another scalping trade to add to this. So yeah, that's Russell 2000 going into tomorrow. Yeah, I put little notes up here from earlier this morning. I was doing a live stream as well, and it's basically just what I was reminding myself. So yeah, today here was a really nice trade right here. This is pretty much similar setup as we were just looking at here for the Russell 2000 that's live. So for the Dow Jones, using the orange symbol 4s, 1, 2, high 3, low 4. There was a long setup, and the bar that signaled it was this bar right here. You see it closed just above north of that line right there. So I just put that black line to signify that. So then if you take it from the low right there and go to the high, you can see it easily went up and hit the 1.146 line right there. See that right there for 20 tick gain. Now I did not get in all the way down here, but look down right here. There you have the low, there you have the high. Look what happened. Price came down, hit right up to 50, and then zoomed on the way back up to hit it. Because one thing that I was looking at was I was putting out the overall move. So you can see right there, I got in at 36,110, which was right on the 50% retracement of the overall move. But what I'm seeing is the reason why I'm putting it on right there is to get you in better. It seems like that for some reason that seems to be a point of interest for this thing. So you got the scalping right there, you got the entry, the optimal entry down right here, and then this one took off really nicely, went up there and hit the target of the yellow line up there for that one. So that's kind of like a perfect one from doing that one. So that was kind of the trade of the day for the Dow Jones, but that one is done. So now what we're looking for is we do have now another potential expanding triangle. So using this one, let's delete this here. 1, 2, 3, and whenever an orange one for you, or a green one, because you see to have orange, you have to have a green in there. So we're looking for consecutive ones because green are at the lowest level. So whenever green one forms, we will have another trade, and it will be a short trade. Let's see, was that 36,210? Okay, so it should be this one right here. There we go. So it already is in here, but the semaphore is not formed yet. And the reason why I wait for the semaphore to confirm it, even though it happens after the fact, the semaphores obviously don't form, right when it's predicting there's going to be a kind of, it's a pivot point or be a turn in the market. Is they form after the fact. So just the way it goes. But I always wait for it to hit because I have seen it plenty of times where it looks like, yeah, it's going to go down and hit it, but it doesn't. And this thing just continues to move on back up. And then you have to go readjust everything. And so if you had gotten in, you're going against the trend big time right there. And it's just going to mess it all up. So whenever the green one forms right here, let's see. So this bar is the closing bar for it. So what I'd look for is, there's a potential scalp right there, and I'd be looking at getting short right in here for it. So going down to the yellow line right there. So we'll definitely watch this one. Wait for this one to turn green, and we'll look to get short in it. Doing it that way here for the Dow Jones. So we do have a short setup going into tomorrow. We can see right here that the extension low of the day was the support of the day. So we do that to that, put on the extension levels and look right there in between the 1.146 and the 1.44. That was the low of the day, and that was the support of the day, and it bounced off there ever since from it. So yeah, just waiting for green semaphore to form up here. And we'll be looking at getting short. And if price comes back up here, look short it and take it to the yellow line down there. Oil currently in this one right here. This is let's think how it does that. This is a triangle trade, and what we're using right here, I can delete all of this stuff because these were other ones. What we're using right here is there's 0.1 green semaphore, 0.2 right there, 0.3 and 0.4. And what I do is I draw a blue line connecting points 1 and 3 to remind me that this is a triangle trade right here. Because there's again 0.1, 0.2, lower high 3, higher low 4. So that's what it is. And then what you do is you put the inside pitchfork right here. Just show you real quick, right there. And then when the price closes above, since we have the pitchfork right here, we're looking for a closing above. Here, closed above it right here. So that is what we are. That's the entry point, and the target is up here at the green line right up here, and it's just 5 level, and then purple line's 1.5. So if we look at doing the optimal entry one for it, let's go back to that. So we can see from where the entry was up to the 1.146 for a scalping trade. We've gotten 18 ticks in oil, pretty good little scalping trade right there. Then if you wanted to get in on the optimal entry 50% level, well, you could have gotten in right there for a really nice entry. It didn't go up and hit the green line up here, so it wasn't, probably would get up all the gains, but it's good 80 tick, 75, 80 tick profit, even though it didn't go hit that. But since then, price has come back all the way down here. So when it hits the green line and or the 1.44, which is not until really far down there. See, there's the 1.44 for the longest. Oh, I'm sorry, that's not the right one. That's it right there. The 1.44 for the longest leg of the move. You could get in right there. But since it hit the green line, we've gotten in down right there. But by the time I saw this, I was already, had a really good entry right here. So no need to move it anymore or get in again unless just wanted to, which would have been fine as well. But in it there, and then we move the exit when price hits the opposite way of the pitchfork, the inside pitchfork, just like in the shift pitchfork for the expanding triangle trade. It's similar principles for the just regular triangle trade. So when it hits opposite way, then you move the exit from looking at the green line up here to slightly below where the entry bar was. There's the entry bar, and I said, we'll just leave it right about there. Should be good. So that's where we're going to leave the move the exit for it right there. So probably could even go a tad bit higher. Maybe we're not sure now. It's at 49. It's fine. Actually, I could go a little bit higher. So something like that, and that's the exit we are looking forward to get out of it going into tomorrow. So for oil, we look at a little bit more of a pop up right here. Was it at 69.65? So at least going up to $70 is what we're looking for. But oil has just sold off big time when it was. What is that? And in September, it was at 90, now all the way down to 70 bucks. But it's oil. So that's trade that we're looking at there. And then going into tomorrow as well. Once this one gets filled, see we got 1, 2, higher high 3, and this will be a little 4. This will create, when we get at least a green semaphore down here, a long setup for oil, which it may already be in. Yes, which it is already in, and probably will get filled before a green one gets filled right there for that. But that is oil. Now for the Nasdaq, a lot going on right over here. So let's delete this one here because we'll talk about that here in just a second. But what we have right here, it needs to turn red, so it didn't turn red. So what we have right here, this using 1, 2, 3, 4. You can see expanding triangle, points 1, 2, higher high 3, low 4 using the reds. So when price broke above it right here, which is right there. So we'll go from the low to where the bar is that it broke out of right there. You can see that would have been a real nice scalping trade, right up to the 1.46. So that one's good. And then look at down here, came right between the 50 and the 61.8. So that would have been an awesome entry for it. Actually, I was taking a retracement trade, and I'll show that one here in just a second. And but ever since then, that was the low. It came back up there and just is close enough. Look how close it is to hitting the yellow line up there. So that one is good enough for government work. So we're going to say this trade is done. And so yesterday, towards the end of the day, I took the retracement trade here. Now, how it works is when you look for an ABCD move right here, see A, B, C, D's all the way up here, but all you're looking for is price going up and hitting the 1.146, which you did right there. And then come back down to it. So hit the 50, went back to 38 for an easy scalp right there. So that one's turned red. This one is done right here. This long trade is set up for Nasdaq. Link like that. But now what we have over here as well is now we have a inside pitchfork. So using this one, points 1, 2, lower high 3, and delete that. Lower high 3 and higher low 4. So we take the inside pitchfork right there to right there, right there, and then low NB hold. There we have the signal. Let's take this off there. There's the bar signal to go long. So if we use from the low of it to the high bar, the scalp we're looking for is up here right there. Right up there. But like I said, I'm not sure that that's a really good trade to take, but that's just one I am monitoring for it. Because I'd rather not get in right here and then have this go against when I'm just looking for a scalp up right here. But price comes down here, look to get in long right here for Nasdaq for this trade. And then in fact, I'll just put that on real quick. Take that all the way, like up here, something like that. I doubt it's going to go that high, but wouldn't that be nice? When is that? It's Friday. So there's end of day Friday right there. Yeah. I doubt it's going to come down, hit that tomorrow, and then rock it up. That 2 percentage points. Yeah, it could. Then please, in under 3%, it could do that. But that's a really big move. But that's what I'm looking for tomorrow for Nasdaq. So we definitely have a long here using the triangle trade again. 1 to lower high 3, higher low 4. Put the inside pitchforks on there, closed above the purple line, which is just 1.5 level. The target is the green line up here, which is the 5 level. But the entry I'm looking forward for it is using the low from the move to the candle that is the entry candle right there. And so then I have my buy limit order right on that 50% level for it right there. So then look for the same thing over here. So yesterday was a pain in the butt because I had a retracement trade set up right here that I got into. But as you can see, price just blew all the way through it. Hit the 50, blew through it, 61.8 and 76.4. It kept blowing through it, so I had to get out for a loss because I couldn't keep that overnight for the margin requirements. So I had to get right back in when it opened right here and actually got in a little bit better. And then, price is coming down. So looking at it, I got this morning and I was like, great. This is not good. But then price rocketed back up and took it out right there. So another thing to look at is from this right here, this move, the A to B move. Look at something right here I want to show you. I think it's the A to B move. Yeah, so if you use the A to B move right there, which is the one you're looking for, and look what happens right here. Price, when it goes the other way, went all the way down, not just to the 1.146, but to the 1.44. Acted like it was going to break on down low right here because when this candle happens, this is straight red down here. It opened right here, and this is just a red candle bar going down right here. But that's right when the unemployment report came out. Look at that, just shot right back up within the next hour and a half, 2 hours. Went up there and hit that. Looked like it was going to give it all up right here, come back down, but then said nope. Just getting some more shorts to add to the fuel to the fire to get the longs going, and went back up and hit it. So it's another thing to look at right here. Haven't seen that too much though. Typically on retracement trades, when it hits the 76.4 level, it'll get some support and go up there and hit it. But this time it didn't. Went all the way back down and went to the extreme level, down to the 1.4, 1.4 the other way. And so now if it does that, from now on, I'll definitely have at least one contract sitting down here as well to get on to add to it, because look at that. That would have been almost about 13, close to a 13-point easy trade right there for it. So that's that. So we'll go see if we can get these limit orders down here from the 50% from this long move that we're looking for. Was this in Thursday? And it's Friday. 215. Okay, yeah, that's fine right there. Got that set. We're in currently we're hoping this comes down and hits the 50% for that one. Let's go look at Bitcoin here real quick. Here's one Bitcoin we're looking at. Here's a short trade, went down there and hit it. See, there's Points 1, 2, low 3, high 4. Closed it right there. So that would have been the entry point. Let's see if the optimal entry would have worked. Yep, worked really nice. Came down close to hitting that. Didn't quite make it. And then did there, but then there's optimal entry get in right there. And came back right down and hit it for that. 640. So that one's done. And then this one, that looks like it's a longer time frame. Oh yeah, for sure. So yeah, so we're still looking at this target up here for this. Let's see the optimal. What are we looking at here? This is on a weekly chart. Yeah, 1, 2, 3, 4. So 2, 3, 4. So we would look at right there. There's the more that closed. So there could be some weakness coming up in Bitcoin right here, because from the low to the closing bar high right there, there's the entry bar right there. So we have the Fibonacci level on it, and let me take this off. That's just retrace and trade. Price, you see price is hitting right off the 0.414. It hit the 0.146, really didn't cause anything. It didn't have retracement at all, and all the way up to 1.414. We still have this gap that needs to come back and be filled. So wouldn't be surprised to see a little bit of weakness in Bitcoin, come down there and fill this gap to the high 39,000s. But for the long term, we're still very bullish on Bitcoin, going up here in this yellow line, somewhere between 55,000s down to a sliding scale down to about 50,000-ish or so. And then the big bull run that we have for it is if it fulfills this 5-week Elliott move, going up to $78,000. But from this trade setup right here, if we do get weakness in the market and it comes all the way down here to 25,000, we'll look at adding more to my position, just because it looks like that's kind of like the optimal entry point for it. And the Bitcoin I do own is more of like using daily and weekly charts to trade. It's not for day tradings, I really do think. Bitcoin still has good room to run, at least up to the 50,000s, if at least not to closer to 80,000 as well for that. So anyways, that's my recording for today. Take care out there. Thanks, bye.